Tesla stock. You are going to hear a whole lot about Tesla stock over this next week, and the reason being is Tesla earnings are on deck. They are coming here in a few days. Two videos I want to react to in this one here today. First one up here, it's more of a talk on the fundamental side around Tesla, kind of what's going on there in the EV industry in general. Second video I want to react to is this one, which is the folks on Fast Money kind of breaking down where they believe Tesla stock's going over the next, let's just call it a few weeks. And this is pretty amazing, this video, because a lot of these folks on Fast Money are usually very, very bearish on Tesla. But when you hear some of the prices that they're expecting Tesla stock to hit over the next few weeks, it's unreal. And the reason it's so unreal is Tesla stock was $101 just in the past couple weeks. And when you hear some of the price targets these gentlemen think Tesla stock's about to go to, it's hard to even fathom it, because it's like, how is this stock just $101 that you guys think it's going to this price just over the next few weeks? So pretty amazing there, okay? I hope everybody enjoys today's video. As always, I appreciate everybody that subscribe to the channel. I think we're, oh gosh, man, I don't even know the subscriber amount. All I know is we get like a new 100 or 200 subscribers like every day. So I appreciate every single person that subscribed to the channel. Glad you guys are enjoying it. And also thank you everybody that supports on Patreon. Yesterday was the big day. It was the big day. I bought some new stocks in the Patreon portfolio. If you want access to see what stocks I bought yesterday, I bought one value stock, one growth stock, and one hybrid stock yesterday in that portfolio. Check out the pinned comment down there to join us in there and also support the channel. I appreciate y'all, and let's get into this.
Really, the only time you brought down some numbers was on delivery news, right?
Yeah, I mean, look, it's really been a tale of two cities, because if you look at the transformational growth story, that continues to be intact for Tesla despite the dark storm, but it's really Musk. I mean, that's really been the black cloud over the story here in terms of, and I think even when you look at the trial, it's just another situation where it's been a black eye for Musk and a black eye for Tesla.
So today, outcomes today are meaningless to the stock at this point?
Yes and no. I think, him on the stand, there's always a lot of sort of wild cards that could take it. And I think it is a frustration from an investor perspective, because you want to focus on fundamentals, price cuts, China. But Musk continues to sort of insert this narrative, and I think this is a good example, combined with the Twitter situation, still no CEO, and that has been,
By the way, if you're wondering what's going on with this court situation around Elon Musk, basically what happened there is back when he did the 420 tweet. Not sure if you guys remember when he talked, this is years ago now. This is probably like, oh gosh, this is probably 4 or 5 years ago now. Elon Musk had tweeted out essentially that he was going to potentially take the company private at $420 a share, okay? Now, what this lawsuit is in regards to is like some private investors are trying to sue Elon because he made that tweet public, and then they sold some shares, and now they're frustrated, and they feel like, they got ripped off because of his tweet, and they made financial decisions around that specific tweet, right? And he's the CEO of a public company, so they're saying you can't do that, especially when trading activities going on and those sorts of things, and they're trying to prove like there was nothing to those tweets, and he was just throwing that out there, right? So this is something Elon had to deal with the government. Oh gosh, he dealt with the government. This was years ago. Elon had to deal with the SEC and the government, and that's all in the past now. But unfortunately, this case from years ago brought up, and Elon has to, take the stand in this whole situation, and he's going to talk again Monday in regards to it. So nonetheless, it's a pretty frivolous thing, but it's just another, like this gentleman kind of points out here, it's another just kind of distraction. But it's not, it's something from years ago, but it is what it is, man.
Overhang over the stock.
Speaking of price cuts, you've got this new survey work looking at EV consumers.
At the end of the day, when you're the richest person in the world or one of those, you're going to definitely have some folks that are trying to get some money from you. That's just how it is, man.
China, who appear to be responding pretty well to the prospect of maybe a cheaper Tesla in that country.
Yeah, we did that this week. Over 500 consumers in China, across EV. It was really to try to gain, okay, what's really happening on these price cuts, and especially against domestic competition, BYD, NIO, and others. Look, 3 of every 4, 75%, plan to buy a Tesla in 2023. That was even over BYD, which I think is pretty important. And it shows they're battling at domestic competitors. And that price cut, you look at that, they ripped the Band-Aid off. 70% said now much more likely to buy a Tesla. Shows that poker move, I think, is working out of the gate.
I've heard a couple of different, one idea is, why would you want to get into an industry where a price war is possible? On the other hand, if they're choosing between margins and units, maybe they're wise to go after units, right?
Yeah, I think right. And I think you've seen it in the stock. The reason the stock's up, call it 25, 30% from lows is because they're putting an iron fence around that install base, as well as we're in the second inning of EVs. The last thing we want to see is them sit there at a higher price point and lose, especially with competition coming from the 313 area code, the Detroit stalwarts and others. So for the street's perspective, sacrifice margins right now for volume. And I think that's really been the important move.
Overall, and think about it like this, right? No, this is like super important for everybody watching this video right now to understand this point I'm about to make here in regards to Tesla, because it's very fundamental to understanding kind of the Tesla story and pricing and margins and all these sorts of things. Remember, all the so-called competition, those folks, none of them can afford to cut price on EVs. They have to try to sell EVs for as expensive as possible. And the reason being essentially is all those companies don't have the margins going into the situation to support that. So Tesla does. They're the only auto manufacturer in the world that has the sort of margins that they can go ahead and cut and make a massive price cut, make volume and demand go crazy. The other ones just can't fight that. If the other ones cut margin, they're going to lose way more money. All these other auto manufacturers basically lose money selling EVs. So if they're to cut price even more to try to be competitive with Tesla, they're going to lose fortunes of money. And remember, their investor bases, right? In terms of those traditional automakers, they're not there to try to grab some, long-term pie-in-the-sky thing that they view as, right? They're there to make the cash flow. They want Ford and GM and Volkswagen and Toyota and all these guys, cash flow. That's who their investor bases are. They're not growth investors. If they were growth investors, they wouldn't be in Ford stock, GM stock, or any of the other stocks. You know what stock they'd be in? Tesla. So that's the tough position that those companies, they're in a no-win situation. Even if they were to say, okay, we're going to sacrifice our entire business and start losing money, you know what's going to happen? All their investors are going to leave. And they already have a problem getting investors of those companies. They're in literally a no-win situation. Elon's got the whole industry right now by the you-know-what, and he's just grabbing it tighter.
Cover a lot of names in tech, and we've had a lot of people talk about being cautious this year and the Fed and the debt ceiling and earnings recessions. But you think tech full year could have double-digit gains, right?
Yeah, the New York City cab driver's bearish on tech right now. and I think it's easy to yell fire in a crowded theater. Our view is that they're doing the headcount cuts they need to do. Numbers in terms of whisper numbers from a buy side perspective, 8 to 10% below street numbers. I think it's set up where you're going to have a lot of these better than feared. And you look in Nadella, Cook, and some of these other, and they're going to be able to navigate the storm. So my view is that tech stocks are up 20% plus this year. We believe FANG names could be up 30% this year.
How are they going to do?
Yeah, the time to be bearish on tech stocks specifically was the end of 2021. That was definitely a great moment, and anybody that capitalized on that, good for you. Now is not the time to be bearish on tech. Many of these stocks have already bottomed or are in a bottoming process right now in the tech industry. Not all of them, but most of them from what I see. The thing, if you want to be bearish on something, is a lot of those Dow stocks, a lot of the S&P stocks. Those ones are almost all overvalued right now. So if you are looking for a, let's call it next downside for something market related, it's a lot of those Dow stocks. You look at almost every single one of them trading extremely overvalued right now, going into a potential recessionary environment. And many of those companies, they didn't see their numbers really get hit in 2022, but they will start to see their numbers get hit in 2023. Whereas a lot of the tech companies are the first to feel the uptrends and the downtrends, okay? And so I just think that's something very important to kind of keep in mind there.
So how are they going to lay off a significant number of employees and then turn around and invest in areas of innovation where they're facing competitive threats like AI?
It's a great question, but look at Nadella and what's happened in Redmond. They're cutting costs in hardware and some of these non-strategic areas, but yet you look at ChatGPT, the $10 billion investment, doubling down artificial intelligence. Because Microsoft, Amazon, Salesforce, and others, they'll cut costs where they need to, but this arms race is going to continue to play out in tech. You're going to see really what I view as winners and losers emerging from tech in what we're seeing today.
Do you cover Alphabet?
Yeah, so look, and to me, my view on Alphabet here,
for those that don't know, the huge news around Google McDougal, which is Alphabet, essentially they announced they're going to cut, if I recall, it's 12,000 employees, which is definitely a significant number. Now, keep in mind that is less than 10% of their total workforce, but nonetheless, like 12,000 employees is still a huge number. Google's one of the highest paying companies in the world, if not the highest. To give you some reference, I was on the Goldman Sachs conference call, okay? And Goldman Sachs just cut 3,200 employees. And do you know what the cost savings was for on a run rate, an annual run rate for those 3,200 employees at Goldman Sachs? The number was $475 million. So if you're talking about Google cutting 12,000 employees, you could be very much talking about several $billion a year in savings to Google. Several billion. So, these numbers, a lot of times they say, oh, it's less than 10% of the workforce, it's no big deal. These numbers can add up to billions of dollars for many of these companies, and some of the smaller ones, it adds up to hundreds of millions. It's not a small number, it's substantial. There's a big difference between if Google packs on an extra $2 or $3 billion in net income on their bottom line, right? It's big.
Rip the Band-Aid off like we've seen across tech. And I think the reaction that you're seeing in Alphabet, look at Microsoft since those cuts. Look at Meta since those cuts. Street wants to see these companies rip the Band-Aid off, navigate through the storm, and I think that's an important thing.
That's interesting because the bear thesis I've heard on Alphabet is they're going to have to match whatever Microsoft's putting together on AI, and that's going to be expensive. It's going to weigh on operating margins, whether or not they hire less, more, the same year on year.
But look at Gates' biggest regret is in the mid-90s during antitrust, didn't invest in social, didn't invest in mobile, and ultimately lost out on trends for the next 2 decades. So I think these companies have learned from that, and that's why this Game of Thrones is going to continue to play out in artificial intelligence, cloud. And I think the theme over the next few weeks is tech. Lowered guidance, stocks up, better than feared. I think it's as underweight as I've seen investors in tech since 2009.
Do you think the entry point for consumers when they go to the internet?
That's a big statement.
Lowered guidance, stocks up, better than feared. I think it's as underweight as I've seen investors in tech since 2009.
As underweight as he's seen investors in tech since 2009. Ooh, that's it. That's a very bold, interesting statement there. By the way, I got an interesting point to make about Meta. So for any Meta shareholders, I got some good news for you coming in just a moment here that I think is very important that I was just kind of thinking about as they were talking about Google, Microsoft, and some of those.
Do you think the entry point for consumers when they go to the internet, the way Google has owned for so many years, could actually change? You think they lose share of that because of this new technology?
Well, I think it's a shot across the bow from Nadella and Redmond, and then that's why they're going for it. And look, Google continues to really have that ironclad, understanding of the market, and no one could deny that. But you're starting to now see some market share potential gains, and it just shows Microsoft's not going to sit there in the right lane. Left lane of innovation, that's what Nadella's going after.
So in regards to Meta shareholders, some really good news that I was just kind of thinking about as they were talking there, right? We know Google is going to have a strong fight with this chat GBT over the next many years, right? So that's going to have to be Google's main focus, is coming out with some sort of competing product likely to the chat GBT, which I think they'll probably be able to do, right? But that's going to take an immense amount of resources from Google to fight them off, right? Now, why this matters for Meta in a significant way is we obviously know Meta's focus on the metaverse. Now, from what we see, the only other company that we're hearing about is kind of working on something metaverse related on the down low right now is Apple. Now, Google's not going to be able to invest. It doesn't look like it now, especially because it's ChatGPT. They're not going to be able to invest aggressively for a metaverse opportunity now because they're gonna have to fight ChatGPT because a lot of folks look at this new service as being something that really gives Google search a true fight. And Google search has to take this serious. So that's where Google's going to have to focus over this next few years. That's absolutely where they're going to have to focus. And on the YouTube side, which is Google's second big business, we know they're trying to fight off TikTok and Instagram Reels right now, right, in short form video. And that's why YouTube's trying to take YouTube Shorts as serious as they possibly can. So Google's got two serious fights. They got to fight with this new service, is ChatGPT. On the Google search side, which is their core business, their second main business, they've got a serious fight on their hands between TikTok and Instagram Reels. So this is significant And for Meta, they're over here with this metaverse opportunity, investing aggressively toward that. And it looks like the only company we're hearing about that even is doing anything remotely there is Apple. And once again, we'll see what happens with Apple. This would be, if Apple did the metaverse and did it successfully, that would be the first time since the Steve Jobs era Apple did anything that game-changing. That's like, oh my gosh, can you believe they've done this? They haven't done anything since Steve Jobs passed away, right? In terms of that type of game-changing, like new, insane opportunity. So that's something significant there. That Meta, man, they got this whole opportunity right in front of themselves. And that this ChatGPT is the best thing that could ever happen to Meta, because now Google's going to have to fight them like crazy over the coming years. Okay. All right. Next one up here. And by the way, I own Meta and Google stock. Just I own a lot less Google stock than Meta. I feel like Meta's risk reward is much better than Google over this next 5 years, in my personal opinion. Next one up here. We're talking about where Tesla stock price is going next. Let's get into this.
Tesla stock is going. Carter Braxton Worth of Worth Charting is over by the plasma with a look at the charts. Carter.
Let's jump right in. First of all, great job by graphics. Shout out to CNBC department. This is a fantastic instance of what you want to see, which is high, low, and close daily bar charts. Now, there are no drawings, no annotations, no judgments. Let's put some in. Here we go. First chart change. What do we have? We have a well-defined trend line, and that warrants putting in some circles. And what do we know? We have just now moved above the trend line, which is to say it deserves a green arrow. Let's put in some more lines. Keep that trend line in. And what do we have? We have all the elements of a minor head and shoulders bottom. Get the green arrow again. Finally, last way to draw the lines, you can call it a cup and handle. It does.
I got to say this before we go any further in this video, because I think this needs to be said, and I think it's important, okay? For all my fundamental investors out here, you know, we look at technicals and we're like, what are they doing? Like, you know, just focus on the fundamentals, right? At the end of the day, technicals are important because so many folks on Wall Street give them power. And so I think it's important, if you're trying to understand where stock prices could or might go or those sorts of things, to understand that these folks are giving these technicals power. So if they see certain, you know, this is hit, that's hit, they're going to buy the stock. Or if this is hit or that is hit, they're going to sell the stock. Regardless of what the fundamentals are, regardless of what the forward P is or the long-term growth rate or any of these things, so many people on Wall Street, so many algorithms are trained that if this stock hits this price, we buy. If it has this much volume come in, we buy or we sell, right? If it hits this trend line or hits this moving average, we buy or we sell. And so this is, it gets rejected here, so sell. This is it. That's why technicals are so important, because so many folks give it value. If it wasn't these folks giving this so much value, no one would care about this. But because so many do, it actually does literally move stock prices. And Tesla stock moves huge based upon technicals, because so many people and so many folks have trained algorithms to give it power to buy or sell the stock.
No matter what you call it, a reversal formation is a reversal formation. And so an important development, the low was 101 and change. It closed at 133 today, up about 30% from its low. I think 155 plus minus is in the cards.
155 in the cards. Think about where the stock was just 2 weeks ago. It was $101 stock. This gentleman is talking about it's going to 155 here soon. That's over a 50% move in a snap of a fingers, essentially, which is incredible to think about, right? That is incredible to think about, that the stock price moving 50% plus that quickly.
This is purely a Tesla-specific story, correct, Carter? This has nothing to do with where you see the markets going over the same period.
Exactly. I mean, Tesla is sinking when rates are going up, sinking when rates are going down. It's surging. It has nothing to do with it. Sometimes a stock gets oversold or overbought, and a counter trend move, down or up, is in the cards. This counter trend move is well underway, and I think it continues.
Carter, thanks.
Tesla stock price does whatever Tesla stock price wants to do, regardless of the market. I've, as somebody who's been investing in the stock for years and has seen it, the ups and the downs and everything around in the stock, it moves whenever it wants to move up or down, regardless of what's going on with the market. I've seen it massively, epically underperform the market, and I've seen it epically overperform the market. I've seen it both sides.
Shortly on options action. Grasso, what do you make of this chart?
Yeah, I love the chart. This is something where I saw the same level, but he sees it a little bit higher than me. I see it as 150 is very likely, and if I broaden that out,
150 very likely. I mean, from a stock that was just over 100, I mean, that's a 50% move. It's fast.
Obviously, technicals are, once you get over a certain level, then it's more likely to go in that same direction. I definitely see 150. I could be wrong, but that's what I see. And then the follow-up with that would be 180 and then 200. And then you're closing that gap from this most recent slide. But
talking about 200 soon. I mean, my gosh, that's a double up of the stock price. It's a double up of the stock price if we're starting to talk about 200.
Feeling has gotten so consensus negative that I think the market's set up to
From
hurt
where the stock was, 2 weeks ago when it was $101 or whatever. It's a double up. It's crazy.
Most amount of people at the same time, and that's what's going on with Tesla.
Man, it's extreme to see, especially those folks on fast money, because they're usually very, very bearish, to hear them talking about, I definitely see 150 in the cards. Now, for us Tesla longs, the important thing to remember is actually, I'd rather have the stock price be low. I kind of wish these guys were all talking about the stocks going to 110 or 105 or back down to 101, because I'm somebody that wants to aggressively continue to add shares this entire year. So I would much rather have Tesla stock be $100 than $200. I'm going to be able to get a lot more shares, right? A lot more bang for my buck. So I wish Elon, well, no, I shouldn't say that, because, he can't really try to manipulate the stock like that. But I was going to say, I wish Elon would come out and talk bad about margins are going to get destroyed. It's super tough. It's super bad out there. Like, just talk down the stock. But I know obviously he can't do that. But nonetheless, the bottom line is I'd rather have the shares be cheaper than more expensive. And I think for all this Tesla longs in the short term, we would. But unfortunately, traders are going to take this stock likely much higher over, the many coming months, especially if Elon and the team comes out and talks about margins aren't going to get completely wrecked. They might get hit a little bit, but we're still going to stay profitable. We have, the most orders coming in we've ever seen. Our factories are going to be at 100% capacity. Orders start to have to push out. If we start to hear all those sorts of things come in, then yeah, there's no doubt this stock's going to keep moving and grooving. And next thing you know, it's going to be at 155, and then it'll be 180, and like the gentleman talked about, then all of a sudden 200. And with Tesla, it moves quick. That's the thing with that stock. It moves down and up quick. Look at how fast that stock went from 400 to 100. If you think it can't go from 100 to 200 just even much more quickly, you're mistaken. It absolutely can, right? And so it's just one of those sorts of stocks. It's very volatile. It makes extreme moves, and it gets a lot of trading activity. Tesla options are almost always one of the most, if not the most traded options out there in the market. Calls and puts. It's insane. People love to either invest in Tesla stock, they love to bet against the company by short selling it, or they love to play options. It's that sort of stock, man. People love to play Tesla stock. Hope you guys enjoyed today's video. As always, if you want to support the channel, you enjoy the channel and enjoy the content, then check out my Patreon. It'll be the pinned comment down there, and also get to see the stocks I bought on Friday, as well as the stocks I'm always buying and selling in there. Much love. Appreciate y'all, and have a great day.